This is what my backyard looks like. Until the neighbor moved in and decided to build a big gargantuan house over there, doesn't it seem like people are building everywhere? This once tiny, quiet community, it's exploding like most places around the country because we've got this backlog of missing millions of homes, which is why today I want to make a video for you on where is the next frontier in the game of real estate? Like, where is it booming? Where is it going to explode? Where are the 4 top markets where I'm personally investing, where I'm expecting the highest returns on any investment I make? Well, that's what I'm going to cover with you today.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
Check it out. I have traveled all over the world with my wife, and everywhere I go, I'm always interested in what the real estate market is like. So I've looked at real estate in the Caribbean, and I've looked at it in Bangkok and Australia and Egypt. And I want to tell you something about real estate in the United States. We're going to talk about whether real estate in the United States is really affordable, whether it's really overpriced based on what's happened compared to the rest of the world. And then I want to zone in and tell you about the 4 specific places where I'm investing, where I'm making the most money, and where you can too. Come on. All right, so let's talk about where is the next frontier in the current real estate market. Check this out. This is, in America right now, the top 10 most overvalued areas that the question is, are they still affordable? I mean, look at this. Number 1, Boise, Idaho. Boise, Idaho is overvalued by 75%, according to Florida Atlantic University study. Austin, Texas, 66%. Ogden, Utah, 63%. Vegas, almost 60%. Atlanta, Phoenix, you know these major metropolitans. They're up 59, 55, 55%. Spokane, Washington is 54%. Provo, Utah, like just down the hill from where I live, is overvalued by 54%. By the way, I want you to think about what that number 50% means that you keep hearing. It means that a house that should be worth $300,000 is worth 50% more of that. What's 50% of 300,000? That's 150,000, right? That's half of it. Well, 300,000 plus 150,000 means that houses are selling for $450,000. It should be selling for $300,000. The market is really overvalued right now. It's going to take a while for it to catch up to that reality, or it's going to have to crash and reset. Definitely be a subscriber on my channel if you want to know when that's going to happen. Salt Lake City, Utah, also about an hour that way, 53%. Charlotte, North Carolina, 52%. So the top 10 cities in the United States on average are sitting between 50 and 70% over market value. And it begs this question, hey, Kris, like, is it even a good time to invest in real estate? And the answer is going to be yes, based on the 4 markets that I tell you about, but that's because I'm not your traditional real estate buyer. I'm an investor, and an investor makes purchases of assets for ROI. It stands for a return on investment. You need to understand these things because people will tell you that real estate is the number 1 most important asset you buy in your lifetime. Like, if you didn't already know, no matter how much money you're dropping in a 401k or an IRA, these qualified retirement funds, by the time you get to retirement, it's not going to be enough money. Like, you need $3 million to retire on $100,000 a year residually. Most people only have a couple $100,000. And so it's interesting that the home that they buy, if you hold it for enough time, can accumulate well over $200,000. So it ends up being a better investment for someone's retirement. In other words, the majority of a person's net worth, more than half of their net worth at retirement, will be in the house that they buy. So wouldn't it suck to go into an overvalued market, buy it way overpriced, and then have it come down and drop when the market crashes, and then find yourself upside down for the next decade saying, oops, that was supposed to be the best investment. Turns out it was the worst investment. Well, that's what the consumer mistake is. But I'm not a consumer. I'm an investor. And investors are counter-cyclical, and we do things backwards. You see, when everyone runs this way, we're running that way. For me as an investor, when I buy something, I'm asking, what's my ROI? If I put up money and I buy a property, how much am I going to make on it? And believe me, I got to make way more money than the stock market, than an IRA would, or traditional investments that are earning single-digit ROIs. Real estate done the right way can produce double and even triple-digit ROIs, especially if you buy in the 4 markets with the strategy that I'm about to unveil. But before we share those, then let's just even ask this question. Is it even a good time to buy real estate in America? Is it really affordable? Is US housing affordable? Check this out. This is wild. According to a recent worldwide study by Demographia, the United States was named the most affordable country to buy real estate. The study examined many other countries, including Australia, Canada, Hong Kong, Ireland, New Zealand, and the UK. And guess what? Real estate might be overvalued in some of the top cities, certainly not where I'm taking you, but you know what? It's still one of the most affordable in the world. So Kris, you're telling me that you're still actively buying real estate? Yeah, I'm not even nervous at all if you do what I'm doing and you invest where I'm telling you to invest. There's 4 places. Here's the first one right now. It's Memphis, Tennessee. Let me tell you why. Memphis has been and continues to be a consistent cash flow market with a steady job market and good home affordability. As of April 2022, the typical home value of Memphis was at $149,000. Mind you, the national median, $405,000. It's literally, I'm buying houses here that are less than half the cost of the increasing national median. Now, am I buying in Memphis, Tennessee because I think that the market is going to explode? Actually, when you look at its demographics, it is definitely positioned for a lot of growth. But that's not why I go to this market. I go here for cash flow because people are paying the same kind of rents as if they were buying a house for $250,000. But because I'm buying it for 6 figures less, guess what that means? It means a lot more cash flow off of those rents. This is a cash flow market. And I come here when I want my money to perform and basically have real estate go to work and every month deposit money automatically in my bank account, making me wealthier. Wait a second, Kris. You're telling me that you go into certain markets for cash flow? Not always. There's 2 types of markets. There's cash flow markets and then there's growth markets. I'm going to share with you my top 2 cash flow markets. I've already shared Memphis. Let me show you another one here because this is another place where I like to go where I can feast on greater cash flows, get some of those cash cows going. That's me pumping the udders, cash cows, right? And then I'll share with you a couple of my growth markets. This is Indianapolis, Indiana. Similar to Memphis, Indianapolis is a mid-sized metropolitan area with jobs in manufacturing, medicine, which fuels moderate real estate growth and consistent cash flow, frankly, at a higher level. Remarkably, the typical home value of homes in Indianapolis, they're sitting at $220,000. So more than Memphis, but again, where someone would pay $300,000 and pay rent on that, I'm picking up that same rent on this $220,000 homes. In this market, I'm still sometimes buying my deals at $190,000, $160,000. And what does that mean? Baby, that means a lot more cash flow. Now check it out. Buying real estate in a cash flow market and getting your money to work for you and earn a really great cash on cash, that's really, really, really smart. Like, that's something that I really like and appreciate doing. But you see, I also got to get my money sitting in another kind of market where I can rapidly grow it. I'm talking about 25%. I'm talking about 50%. I'm talking about 100% annual ROIs. When it comes to my investments, I want to freaking kill it in my growth markets. I want the highest cash flow in the cash flow markets. I want maximum growth in the growth market. And so the next 2 markets I'm going to share with you are where I kill it the most. It's where I'm making the most money. It's where my money is multiplying. Like, imagine for a moment. Contemplate what it really means to have 100% cash on cash. That means you laid out some money and you bought a home, but that money doubles. That's what 100% means. It means it doubles every year. That's what I've been experiencing. I'm not promising that that's going to continue happening or that it's the trend or the pace, but I'm going to tell you for the next 5 to 7 years, because we're missing millions of homes and we have to catch up before there can be a crash, for the next several years to come, anyone owning real estate is going to kill it, especially if they're in these 2 markets. Come on, Kris, tell me where your growth market is. Okay, it's right here. This is one of them. It's Orlando, Florida. Orlando has a growing population of elderly citizens. Literally, this is where people want to go to retire. It's where they want to play golf. And it's amazing how affordable so much real estate is. By the way, the elderly, they make excellent renters because they have the means. They treat properties well. And while the typical Orlando home costs now $365,000, prices increased last year by 30% alone. Now I want you to think about 30% on 365. That means that this home went up over $100,000 in a single year. How do you think I feel about that, having bought real estate there every month, tons of them for the last several years? You want to get happy like me, you got to own real estate like me. These price increases, I'm going to tell you right now, they're going to continue increasing. And we're really good at timing the market because while the stock market may not be predictable, real estate, it's not rocket science. It's actually really easy to understand the basic supply and demand market forces that determine when markets go up, when markets go down. By the way, if you want to get some of my predictions on what's going to happen in the market, all you got to do is subscribe because I'm going to talk about that. What I'm telling you is that this is a market that I like to be in. That doesn't mean that I'm even buying at 365. My average purchase price is under $250,000. And it means that I'm riding a freaking wave. And at the end of this video, I'll show you how you could ride that wave with me. And my second recommended growth market is Greenville, South Carolina. Greenville is the cultural and entertainment hub of upstate. With over 10 colleges and universities within close proximity, this is a diverse and growing city with a high rent demand. Moreover, a typical Greenville home costs around $291,000, making investing here both a good growth and a really smart cash flow play. So if you're looking for a little bit of like the hybrid option, you're gonna find it right here. Kris, am I early, on time, or late to the real estate investing game? Well, if you leverage my strategies, it's always the right time to invest. But if you want to make the most money in real estate, the next 5 to 7 years is really when you're going to hammer home and make it happen. After that, we got a bit of a crash, not a slowdown, a freaking crash coming. And after that crash, we're then going to have a glut on foreclosures, and it'll be the second best timing in the century to be in the game of real estate. I think it's going to be akin to what we saw 1930s. I mean, we got such a jacked up, weird economy right now, but if you know how to play it, this is literally not the worst of times. It's not the scariest of times. It is the best of times. So listen, if you want to learn how to invest in real estate, or better yet, if you want to partner with me and leverage my track record of my last 6,000 homes, there's a link below and you can learn about partnering with me. But if you're really sincere and want to reconnect with your financial future, if you feel really committed to not retiring with hundreds of thousands, but with millions of dollars, which by the way is not a lot of money, but if that is at least your minimum standard and you're serious about that, click the link below and I'm going to provide my track record on my last several thousand homes so that you can read up, see what I'm up to, see how we're killing it, crushing it right now. There's obviously no guarantees, but if you want to play a game I believe that will give you foundationally the highest chance of having the financial life of your dreams, you're going to find that in the link below. Fill out the information. I will have a qualified member of my team that I personally trained. They're going to be in touch with you and they're going to walk you through what it all looks like. You're going to find out, hey, you put up the money from a 401k, an IRA, from savings, equity in a home. Kris's team is going to step in and do all the work. We'll be 50-50 partners. If you like the idea of getting half of the winnings without doing any of the work, definitely click that link. We'll be in touch and I'll teach you what it looks like. Sounds like I have some really strong opinions about what might be happening in the market. So I got together with international commercial real estate investor Dolph DeRoos, and we actually collaborated on a video talking about our 7 predictions on what we're going to see this next year in the market. If you want to know where we think it's headed and why we think timing is right now to invest in real estate, click this video and watch it.